the other things here that I just wanted to talk about as far as setting the stage, and thanks for chiming in there, Jack. The experience that somebody has with your institution is going to make more of a difference than the products and services that you offer, because at the end of the day, what we do as banks for the large part is really a commodity business. Mortgages and checking accounts, it's the experience, it's the engagement, it's the extra value that you bring to the table. Sometimes that's referred to as mind share, where you actually get into the head of what your customers really want to know, so you understand their pain points and their challenges. So you're not just talking about products and services, but you're answering questions that might even go beyond the products and services that you can offer at the bank, which I think is important, because when you do that, it fosters trust, where the people on the other end, whether it's in a customer feeling like you're taking really good care of them, or someone you're courting to try to earn their business, they're going to trust that you have their best interests at heart and not just trying to sell the next loan or get the next deposit account. And when you do that and you establish that mind share and that trust, the likelihood of them wanting to do business, the conversion is what the marketers are actually looking for, is going to be increased. And that sometimes is a challenge, because often marketers and salespeople are trained to talk about the products and the services because that's ultimately what we sell. But you're really selling yourself. You're selling the relationship and that emotional connection. And that's based off of knowledge and the way that you can understand and connect with your prospects. So I
Yeah.
think it's a really important thing to mention there.
And it's a good point, because when I go out and I still do a lot of classroom training and a lot of sales training, too often what happens is we focus on the bank and not the buyer. And when the banker goes out on a sales call, on a first call, I call it discovery, and you bring questions and you bring something of value. The only thing that a banker should bring on the first call with a bank logo on it is a business card. And that flies in the face of a lot of marketing kinds of things, but there's always going to be opportunities to talk about your collateral and talk about your products. But here's a statistic that you could take to the bank. Only 17% last year, only 17% of business bankers got into call number two after call number one, and the sales cycle is expanding. It's about 8 calls. So 17% of those bankers got on to the second or third or fourth call. And part of that is because what they bring, what they say, and what they do. Always remember this: the buyer has the answers and the seller has the questions. You bring great questions to the table, you'll always get back in the door.
Awesome. Sage advice, and not the last bit of it I think we're going to get in today's webinar. Um, so I have the opportunity to speak with marketers all over, and I actually run marketing forums for 4 state banking associations. So I'm with marketers a lot. And I can tell you that there is often a challenge, and Jack, I'm sure, can hear a lot of the sales side of what the challenges are. But sales is often focused on making the sale, achieving quotas, getting new business. Marketing doesn't have control over that, but they're looking at things like engagement and building visibility. And if you're not communicating between the two departments, those sometimes don't complement each other, or there's an understanding of why both matter in that sales or that new customer acquisition process. Sometimes your tech silos are independent of one another. And I know a lot of marketers that don't have access to the CRM that is being used, or the application system to check to see if there's any in-process applications they'd like to, but nope, that's part of the loan department. And so batten down those walls so that there is access to the technology and it's not siloed. We're willing to share and collaborate together. Marketing sometimes doesn't get updates from the field as to what's resonating, the conversations that are going on, to then be able to refine its marketing messaging and to make sure it's on point and on target, or if there's a competitor doing something. The BDOs, the commercial lenders, they're out and about. So feeding that information back in to the marketing process will make the marketing just that much better to support that sales process as well. Sometimes if that doesn't exist, marketing could be perceived as somewhat generic or vague, or, hey, I need this to really be focused down to me, for myself and my customers. And if that doesn't happen, sales obviously can get a little frustrated because we want it to be about that individual relationship. And then lastly, the perspectives on the buyer journey. Sales is really looking for that final decision and the customer to take action. And most times it's a signature on a loan app or, a closing meeting. Ben, again, back to marketing, building interest, building awareness, visibility, clicks, those sorts of things are mostly what marketing can influence. And that's what is being tracked.